Assalamualaikum warahmatullahi wabarakatuh and good day. I believe that in general, most investors in various asset classes have been impacted by the recent market turmoil following the COVID-19 outbreak. Nevertheless, we have seen a resurgence in financial markets as governments around the world delivered stimulus packages and economies starting to reopen. After a strong performance last year with returns of 10.6%, the Global Sukuk asset class continued to perform strongly in the first 2 months of the year. In March, it corrected in line with all other asset classes globally. Since then, governments and central banks around the world have implemented massive fiscal and stimulus packages to cushion the impact of COVID-19. The US Federal Reserve have cut their interest rate twice to almost 0%, which is the lowest level since 2008. The US Central Bank also announced unlimited bond purchases to inject a massive amount of liquidity into the system. During this period, US government bonds have rallied strongly, driving yields to record lows. As the global sukuk market is mainly denominated in US dollar, it directly benefits from the rally in US government bonds. Since April, we have seen the global sukuk market recover with prices pushing higher. Fresh positive sentiment was driven by the rally in US government bonds and successful US dollar bond issuances by Asian and Middle East governments. On top of that, a historic agreement between OPEC+, Russia, and the G20 nations to reduce excessive oil supply has boosted oil prices from its recent lows, which bodes well for oil-producing nations. In April, a number of Middle East governments such as Saudi Arabia, Qatar, Abu Dhabi, as well as Asian entities such as Petronas and the Indonesian government issued US dollar bonds. Saudi's bond was 7.7 times oversubscribed, while the rest was 4 to 6 times oversubscribed. 70 to 80% of the issuances were taken up by investors from US and Europe, signaling strong global demand for quality bond issuers from the Middle East and Asian region. The strong global demand has driven a sharp recovery in global sukuk asset prices. Our principal global sukuk fund delivered returns of 6.6% in the second quarter. The outlook for fixed income assets continues to be positive given the flush liquidity in the financial markets. Global central banks have recently expanded their bond purchase program and cut interest rates to record lows to cushion the economic impact of COVID-19. Flush liquidity, coupled with expectations of slower global growth, will continue to drive demand for bonds and sukuk. Global interest rates are not expected to rise anytime soon, therefore providing a very conducive landscape for global sukuk to continue to do well. Demand for global sukuk may remain strong, given that the GCC countries now constitute about 17% of the JP Morgan Emerging Market Bond Index. In addition, we expect global sukuk prices to continue to be supported by rebounding oil prices as most countries have started opening up their economies while some are looking to reopen their borders for travel and tourism. Oil prices will also continue to be supported by OPEC+ production cuts, which will remain in place for the next 2 years. Valuations for global sukuk continue to be attractive, with ample room for credit spreads to compress further, which would propel prices higher. Against this backdrop, we expect global sukuk to continue to do well.